So this is a specimen of receipts and payments account. In the books of receipts and payments account for the year ended 31st March 2020, we'll see the what are the entries are coming in a receipt side amount, and receipt side what are the amounts are coming in a credit side. So receipts debit side what are the entries are coming, and credit side what are the entries are coming mm, in a receipts and payments account. So first first this account starts with opening cash and bank balance and closes with cash and bank balance at the end of the year. So in a final account we used to do first opening balance then closing balance. So in this we are using this method, and we'll see the what are the entries coming under the debit side of the receipts. So to balance brought down, cash in hand, cash at bank, name of the banks will come, and two subscriptions previous year, current year, next year. While calculating our receipts, we need to consider these years, previous year, current year, and next year. And entrance fees, to admission fees, to to life of to life membership fees, to legacies, government grants, donations for specific fund, building fund, prize fund, tournament fund, dividend received, and higher or rent of all received, and sundry income, sale of old material, sale of old news papers, scrap, so miscellaneous receipts and tournament receipts, cricket fees, tuition fees, term fees, collection of fine, locker rent, exam fees, and balance carried on bank overdraft. These are the entries are coming in a credit debit side of the receipts. And what are the entries are coming in a receipts of credit side? So buy balance brought down, bank overdraft, and salaries previous year, current year, and rent rates and taxes previous year, current year, and next year. Printing and stationery, general expenses, interest on bank loan, electricity charges, audit fees, tournament experiments, expenses, wages, purchase of sports and materials, insurance, telephone, mobile expenses, and bank charges, postage, conveyance, and expenses for annual function, fixed deposits, purchase of a fixed assets, books, furniture, building investments, and newspapers, office expenses, repairs, balance carried on cash in hand, cash at bank. And this is the specimen of receipts and payments account. So till now we studied that what is the specimen of receipts and a payment account. Now these are the entries are coming under the receipts and payment account. Next we'll see what is the meaning of income and expenditure account. Meaning of income and expenditure account is a summary of revenue incomes and revenue expenses of a particular period. It is similar to profit and loss account. It is a nominal account, not for profit concern. Prepare income and expenditure account, and all revenue expenses losses of a current year are debited, and all revenue incomes gains of a current year are credited to this account. And this is the meaning of the income and expenditure account. Incomes. In income and expenditure account, only revenue incomes or gains of the current period are credit side. Example, subscriptions received, interest and investment received, sundry receipts, general donations received, tuitions fees received, etc. Incomes received for previous year for next year are not taken into this account. However, all incomes pertaining to current year, whether received or not received, or received during the previous year for this year, are taken into an account. On the other hand, outstanding incomes and pre-received incomes of current year are considered. This is the incomes. What are the incomes are coming? Those are the whatever which year it is received, last year, previous year received, or the current year, or next year. These entries are coming in incomes. And expenditure. What is expenditure? Only expenses only expenses losses of current year are debited to this account. Expenses are current year are debit to the current year expenses are debited to this account. So items of expenses of not for profit concern may differ from concern to concern. Expenses paid for previous year or for the next year are not taken into account. However, all expenses pertaining to current year, whether actually, so in a current year we are taking the expenditure of the debit side entries, and whether actually paid or not paid during the previous year or current year are taken into account. In other words, outstanding expenses and prepaid expenses during previous year are considered. An income and expenditure account shows surplus or deficit of the concern. Excess of income over expenditure is known as a surplus, while excess expenditure and over income is in a deficit. So if there is a surplus, it is added to the capital fund, and if there is a deficit, it is deducted from the capital fund. Surplus, it is added to the capital fund, and if there is deficit, it is deducted from the capital fund. So next is, what is the features of income and expenditure account? Income and expenditure account is a nominal account. So nominal account rule is that debit all expenses and losses entries will come in a debit side, and credit all incomes and gains entries are coming in a debit credit side. This is the nominal account rules. This account records only revenue, expenses and income of a current year only. This account records payment, income and expenditure. These records are taking only expenses current year expenses and expenditure it is taking. It is prepared to find out surplus, that is excess of income or expenditure, a deficit, that is excess of expenditure or over income, using the preparing of this surplus and excess or deficit. Using a income and expenditure account, we'll find out this one, surplus and a deficit. An income and expenditure account is always accompanied with a balance sheet. Income and expenditure account is always accompanied with a balance sheet. It has no opening balance. And surplus or deficit is transferred to capital fund. And next is, it records all cash items as well as non-cash items which are related to current period. Example, salaries paid, outstanding salary, bad debts, depreciation on fixed asset, etc. These are entered in the current period, sorry, current year. And this is the specimen of books of income and expenditure account. So expenditures are coming in a debit side and incomes are credit side. So these are the entries: salaries paid and paid for a last year, we are deducting last year amount, and for paid for a next year. And so how you is to calculate in a P&L account, P&L account and trading account, same calculation. Little bit there will be difference for the subscription deficit. There ways to take a depreciation, opening stock and closing stock, and net sale purchase, net sales, and net purchase. We used to calculate those things little, and that method also will apply here. So add prepared for last year. So we are taking here years, so current year, previous year and last year. While started with the problems, will understand properly. And to wages, printing and stationery, rent, interest, convenience, rates and taxes, insurance premium, so audit fees, office expenses, mobile expenses, telephone, medicine, sports and materials consumed during the year, opening stock, purchases, closing stock, repairs and maintenance, electricity charges, newspapers and periodical sundry expenses, loss and sale of assets, depreciation on fixed asset, and surplus, excess of income or expenditure. These are the coming in a debit side of the entries, expenditure. And what are the income side entries? Subscription received and less received for last year and received for next year. Those things we need to add in the inner column, then outer column the total amount will come. And a received during a last year for current year, outstanding for a current year, and rent received, interest received, dividend received, government. What are the incomes are coming? Incomes and gains are coming in a credit side of the income, credit side of the income and expenditure account. So ground rent, sundry receipts, entrance assets, entrance fees, admission fees, donations, profit and sale of asset, proficit, overcome. This is the specimen of income and expenditure account. So using these entries, we will calculate to solve problems. We will clear all with this while solving the problems. What are the adjustments are coming? What are the hidden adjustments? And what are the which year is we need to calculate. So in a current year, what entries we need to take? So we'll clear with all the details in detail. So distinguish between receipts, receipts and payment account and income and expenditure account. What is the difference between a receipts and payment account and income and expenditure account? So in this, a receipt and payment account and income and expenditure account. So first point is type of account. The receipts and payment account is a real account, and income and expenditure account it is a nominal account. And nature, what is the nature of this receipt and payment account? It's similar to cash book, and it is like a profit and loss account. Using a trial balance we'll prepare it is like a profit and loss account, and this is a ledger, journal entries and the ledger will come in this. And object, it is prepared to present a summary of a cash transactions. What is the expenditure happened, what is the income happened, how much receipts and payments happened in the year. So it is prepared to ascertain the net result of all income and expenditure. So to find out in the net result, we are calculating income and expenditure account. And opening balance, it starts with the opening cash balance and bank balance and a bank overdraft. It has no opening balance in a incomes and payments, income and expenditure. And closing balance, the closing balance represents the cash in hand and cash at bank at the end of the given period, and the closing balance represents a surplus or a deficit. In the income and expenditure, we are taking a surplus and deficit. So receipts and payments, all receipts and payments during the current period are recorded in this account. So current year entries are recorded in the receipts and payments. So in only revenues of receipts and revenue and expenses are related to current period are recorded in this account. And what is the non-cash items? Cash items are not recorded in this account, but in this account non-cash items are bad debts, bad outstanding expense are also included, calculated in the this account, incomes and expenditure. And next is all accounts, all transactions related to personal accounts, real accounts and nominal accounts. This accounts contains only nominal account. And period, it includes the amount received or amount paid for any period like a previous year, current year and next year. But in this account, amount related to current year only are included. Only current year entries are taking in income and expenditure. In a receipts and payments, we are considering last year and previous year and this year and for the next year. And balance sheet, we need to be necessarily accompanied by a balance sheet. It is always accompanied by a balance sheet. So this is the difference between the receipts and payments account and income and expenditure account. And preparation of income and expenditure account. Income and expenditure account is a nominal account. All revenue, expenses and losses are debited to it, and all revenue, income and gains are credited to it. And it is similar to profit and loss account. And preparation of a balance sheet. Balance sheet is a statement of assets and liabilities of the organization as on a particular date, and the balance sheet of non-trading organization is similar to a balance sheet of a sole trading concern organization. A balance sheet only show capital receipts and a capital expenditure. Balance sheet is prepared with a view of to measure the exact financial position of an organization concern on a certain date and normally at the end of the year. So how in a final accounts we used to prepare a balance sheet for the how business are running, and what is the expenses and the losses are going in the business. For coming to know that we used to prepare a balance sheet. So in this we are coming to know that normally the view measure to exact financial position of the organization. And the excess of assets over liability system as of capital fund. If the opening balance of capital fund is not known, it can be ascertained as the balancing figure by preparing opening balance sheet. So this is all about why we are preparing a preparation of a balance sheet in a receipts and payments and income and expenditures. And we studied that what is the preparation of income and expenditure and difference between receipts and payments, receipts and payments, and income and expenditure account, and specimen of receipts, income and expenditure account. So next, in a next video we'll see that implied adjustments. So we'll see the adjustments, hidden adjustments and direct adjustments. We'll study in a next class, that is implied adjustments. Thank you.